Good morning, everyone. Welcome to the TradeStation Masterclass. My name is Jesus Nava. I'm the Director of Client Training and Education for TradeStation Securities. I do these classes just to show you the potential of the TradeStation platform and everything you can do with it. The TradeStation desktop has a built-in programming language that allows you to build strategies and customize indicators that I think it's fascinating. Today's topic is about building an adaptable strategy that is going to adjust to changing markets. So we are going to take a look at TradeStation's functionality in the area of strategy building and programming. For those that are new to TradeStation, this may be a little bit of an advanced type of class, but I'm going to try to keep the concept simple and show you what the potential is once you start learning a little bit about EasyLanguage. Before we get started, just the usual disclosures. Just keep in mind that every symbol and idea that I talk about is for educational purposes only. These are not recommendations of TradeStation. Also, active trading is not suitable for everyone, and past historical performance is no guarantee of future results. If you need additional information on these disclosures, go to tradestation.com/important information. All right, let me go ahead and jump over here to my TradeStation platform. Okay, we are going to set up a chart analysis. And for this class, let me just show you or give you a quick demo on how to set up a quick strategy on a TradeStation chart. This is NVIDIA that I have here on my chart. It's at the 5-minute time frame. Let me go ahead and change that to 30-minute. All right. And I'm going to load 1 year worth of historical data. So I'm just going to type that in, 1 year, and hit enter. It appears that I already have a position open on NVIDIA, but let me go ahead and disable account orders and positions. By default, the TradeStation desktop is going to be connected to your trading account. So any open orders or any open positions you have on the symbol that you have on the screen will probably be visible. You can turn that off by going to settings and going to account orders and positions. And I'm going to turn the status off, or just uncheck the little box here and click OK. And as you can see, the information on my open position is gone. That way, if I'm going to start working on a strategy, I don't have any signals or any other information that could be distracting at the time that I build this concept. Okay, so I've changed the time frame of my chart to a 30-minute time frame, and I've also loaded 1 year worth of historical data. The time frame and the amount of historical data is important when it comes to historical backtesting. The reason for that is because the time frame pretty much sets the tone or the speed at which the strategy is going to generate trades. The more granular your time frame is, the more frequent the strategy is going to calculate and potentially send orders into the market. So I've set my chart to a 30-minute time frame. So every 30 minutes, my strategy will evaluate the strategy conditions and generate trades. So it's not a hyperactive strategy. It's something that gets evaluated every 30 minutes. But at the same time, I just want you to start thinking about time frame and how does it affect the frequency at which strategies generate trades. And I've also loaded 1 year worth of historical data because I'm going to do some historical back testing and see how the strategy would have played out if I had just traded it the way that it comes out of the box. Okay, if I scroll back on this chart and I click on the background of the chart and I hold my mouse button, you'll see a little box called the data tips window. It gives you information about the open, high, low, close of the candlestick where the axis bar is, but it also tells you the date and the time. And as you can see, the date on the top left corner of that data tips window, it's August 5th, 2024. So a year worth of data. And the reason why I loaded a year worth of data is because I want to see how the strategy performs in different market conditions. The market may be bullish, the market may be bearish, and you need to have an understanding on how the strategy behaved historically so that you can build some sort of a confidence of what the strategy is going to do going forward. Now, we did say at the very beginning, and this was part of the disclosure, that whenever we see a historical backtest, that is not an indication that it's going to happen exactly the same going forward. If you've traded the markets, you know that markets are unpredictable, and something that happens historically doesn't mean that it's going to happen going forward. But if you're able to find a strategy that consistently provides you good results, whether the markets change or not, then you may have something that is worth looking into. You may have a strategy that is sound, and it's probably something that you can trade on multiple markets. But it is something that you need to develop and look into yourself just to determine and try to build that confidence on the strategy. Let's go ahead and take a look at something that's built into the TradeStation platform that you can use right out of the box. I'm going to go here to Studies and click on Add Strategy. If you haven't been to the Add Strategy dialog, we have dozens of different strategies that are already created and based on popular indicators. For example, key reversals. There are several key reversal strategies here, and they end with the letters LE, LX, SE, SX. The letters at the end tell you what the direction of the strategy is. LE is the long entry, LX is the long exit, SE is the short entry, and SX is the short exit. Every strategy component inside of TradeStation will have those letters at the very end, letting you know what the purpose of the strategy is. I'm going to show you something really quick, and then we're going to start taking that same concept, that same idea, and we're going to start making it our own. Okay, I'm going to just select the two entry strategies, the long and the short, and I'm going to see how the strategy behaves. Let me go ahead and click OK to this. All right, so this is a key reversal. If you're not familiar with the concept, it's very simple. It just takes two candlesticks or two bars. It takes a look at the highs or the lows. So on a key reversal up, you have lower lows. So you have a low that is lower than the previous bar's low, but then the closing price is higher than the previous bar's close. So you have lower lows, an indication that the prices are dropping, but all of a sudden you get a closing price that is higher. And that's a key reversal up. A key reversal down is the opposite. When you have consecutive higher highs, so the current bar's high is higher than the previous bar, but then all of a sudden you get a closing price that is lower than the previous one. So that's called a key reversal down. A very simple two-bar pattern, and this is a strategy that is just generating a signal every time that happens. Now, I'm going to show you a little bit of EasyLanguage so you can see that even though this is a strategy that is inside of TradeStation and is supplied with a TradeStation desktop, it's something that you can open up and see what the conditions are. Let me right-click on one of these blue arrows. I'm going to go to Edit EasyLanguage for Strategy, and I'm going to select the key reversal LE. That's my long entry. I just want to take a look at the condition and see how it's set up, because I'm going to use exactly the same syntax, but on my own personal strategy. Okay, here it is. Now, the green text that you see inside of the code, and I just want to explain this because you can open up any strategy inside of TradeStation and any indicator inside of TradeStation, and you get this EasyLanguage editor, and this is what EasyLanguage looks like. And all the text that shows up in green is just notations. It's not really part of the code. The code here is this right here. If the low is less than the lowest low for a length period, this is the period of time. So it's going to look back a period of time. And if you're at the lowest low and the close is greater than the close 1 bar ago, then that is my key reversal. So what we talked about, you have a low that is lower than the previous bar, and then you have a close that is higher than the previous bar's close. Okay, and you can see that the order action here is to buy next bar at market. So let's go ahead and see this in action inside of the TradeStation platform so we can find that signal. Let me open up the chart here a little bit. Let's take a look at this signal. Hopefully you can follow my cursor, is right here below. This is a blue arrow generated historically, a key reversal long entry. The reason why the signal was generated there, because it's looking back at the two previous candlesticks. As you can see, the low of this one is lower than the low of the prior one. Makes it very clear, right? But then all of a sudden you get a closing price, or the closing price of this candle is higher than the previous one. That meets the condition. Now, one thing that you have to keep in mind is that whenever the strategy is evaluated, it's going to happen at the close of the bar. So it's not until the close of this candle that is able to see that a key reversal up is happening. You have lower low, and the close is higher than the previous one. And that's why on the next bar, it generates a long trade. Does that make sense? And it's going to do that every time that the condition is true. It's going to find and generate a signal and display it on the chart for you. That's why when I squeeze the chart, you can see how this strategy, it's flipping me back and forth between a long trade and a short trade based on that key reversal condition. As soon as you put a strategy like this on a chart, as I said earlier, it's going to find every single instance of the strategy historically, and you can pull up something that's called the strategy performance report. That is going to be in the data menu, strategy performance report. It tells you how the strategy did. Now you can see how in here we get a performance summary. Let me go ahead and make this larger so that we can see more of it. And there is a collapse button over here on the top right, which hides a lot of the additional calculations that I may not need just to get a feeling of what the strategy is doing. I'm going to just click on collapse, and you can see that the strategy is not doing very well. The total net profit is a loss. So we lost about $1,200 in 1 year. The profit factor is 0.97. So it just means that for every dollar that we lose, we make 97 cents. So it's a break-even strategy, because you can see the gross profit is about 41 grand, but then we lost, the gross loss was about 43 grand. It's almost a break-even strategy. So it's not good. Out of the box, it doesn't work really well for NVIDIA, but there are certain things that we can start doing to the strategy to make it adapt a little bit better to market conditions. For example, this key reversal strategy is just looking at those two bar patterns, and whenever they happen, it's just going to generate the trade. Now, one component that I may want to add here is the ability for me to filter some of these trades. And when I say filter, is just look at other market conditions. For example, if the market is trending up, like for example, here in the month of July, we see the price activity for NVIDIA leaning towards the upside. If the market's leaning towards the upside, maybe I refrain from taking any of the short key reversals. So why am I taking short trades if the overall trend is going up? Maybe those little short trades is what's making the strategy not work for me. The component that I want to add here to this particular strategy is some sort of a bullish, bearish type of filter that allows me to decide whether I want to take a long trade or a short trade based on the key reversal. So let's go ahead and build our strategy so that it doesn't just rely on the two-bar pattern. It starts introducing other components. And we're going to start creating a strategy from scratch. As I said before, this is an EasyLanguage class, and it may be a little bit more advanced than you're used to, but hopefully you guys can follow along. And if you guys need me to share the EasyLanguage with you, just send me an email and I'll be glad to share it with you. Okay, let me share it with everyone here. education@tradestation.com is my email address. What I'm going to do is I'm going to go here to my development environment. Okay, this is where we saw the key reversal strategy. Let me remove some of the other items that are here. I don't need them. I'm just going to focus on the strategy. I'm going to create a new one though. I'm going to go here to File, New, and I'm going to create a new strategy. Okay, I'm going to call this @MC since I'm creating it inside of a masterclass session, and adding a prefix to your strategies groups them so that it's easier to find them. Okay, so I'm going to call this @MC. Let's call this SMA KR. Let's just call it SMA KR. SMA is for simple moving average. KR is for key reversal. And let's go ahead and also introduce ADX. So 3 different components. The key reversal is going to be my entry signal. The SMA, or the simple moving average, is going to be my filter. So I'm going to use a moving average. Whenever the price activity is above the average, I'm going to call that bullish. And whenever the price activity is below the average, I'm going to call that bearish. I'm going to use that as a filter to filter out the key reversal entries. But I'm also going to use ADX as a form of a filter. It's going to be a way for the strategy to know if we are in a trending mode. I'm not sure if you're familiar with ADX, but ADX tells you if the market's trending. It's a measure of trend. So the higher the ADX value, the more significant the trend is. When the market's not trending, when it's sideways, you see the values of the ADX kind of drop. So we're going to combine those three concepts into one single strategy. But first of all, let me go ahead and bring in the definitions of key reversal, which are my two entries. So I'm going to do key rev up and key rev down. In EasyLanguage, you're going to see that you can make up words. So what I just typed in there are made up words. This is just my mind working and defining what key reversal up is and key reversal down. Now, I can set this to equal, meaning that I can specify what the formula for the key reversal up is and the key reversal down is. The key reversal up, I can copy it from here. This is the low, this right here, this line. I'm just going to copy it. Notice that I'm just copying it from one of the built-in strategies. That's something you can do on your side as well. And I'm going to paste it here. Is the low when it's lower than the lowest low. Now, of course, this is using a length. And so we're going to have to do some additional cleanup here that I'll show you how to do that, okay? And for the key reversal down, I'm going to say high is greater than, and instead of lowest, I'm going to use highest because I'm looking at the other side of the extreme. So this is not the low, this is the high for a length of so many bars. And the close is not greater, but it's less than 1 bar ago. So always when you copy and paste, one of the things that you have to do is make sure that you are inverting all the less than and greater than in the right order, and that you are paying attention to what prices are being referenced. On a key reversal up, I'm looking at the low, but on the key reversal down, I'm looking at the high. So you have to make the switch accordingly, okay? Let me go here to the top and let's do inputs. Inputs are the way that the trader communicates with the strategy to change parameters. One of those parameters is going to be the length. How many bars back do you look for that lowest low? The simple key reversal just looks back 1 bar, but you can change that. I'm going to start length up here. I'm going to open up parentheses and I'm going to start it at 1 because that's the default. You can change it and make the key reversal a little bit stronger so that it's not only the lowest low compared to the previous one, but you can say, go to the lowest low, but the lowest low of the past 2, 3, even 5 bars, and it gives you a stronger key reversal. That's optional. That's why we have that input here to change that parameter. And variables are the custom calculations. These are where you have to declare your custom words. So I put them here first, and I put a definition to each one of them, but now I have to tell EasyLanguage, hey, EasyLanguage, these are the words that I'm going to start using, and that's why I'm putting them in the variable declaration statement. Key rev up. This is what's called a true-false variable. Why? Because this condition or this expression that you put in here after the equal sign, it's either true or false. If this were a mathematical operation like 1 + 2 = 3, the value that returns as a number, it would be a numeric variable. But when you have comparisons like less than or greater than, that is going to be equals. That is going to return either a true or a false statement. So key reversal up, I'm going to initialize that as a true false variable, and key rev down, let's set that as also a true false variable. And without any more complications, this is just a simple strategy. I'm going to say if key rev up, then buy next bar at market. Notice that it's a simple command. And we'll do the other side. If key rev down, then sell short, next bar at market. Those are the order actions based on the key reversal condition. I'm going to verify my strategy now to make sure that I don't have any errors. I'm missing a semicolon here at the very end. One of the things that EasyLanguage expects is a semicolon at the very end of every expression. It's like saying, it's like telling EasyLanguage, I've reached the end of this sentence. I'm going to start a new idea. That's why it's needed. Let's verify one more time. As you can see, I have 0 errors and 0 warnings. So I just built a simple strategy based on the key reversal concept. Every time that it happens, it's going to generate a trade. Let me go back here to my TradeStation and remove the one that's here. Let's remove the one that we added. And I'm going to go here to studies, add strategies, and I'm going to add the one that I just created at MC. I think I called it SMA KR ADX. Not that one, this one. Yes, SMA KR ADX. I'm going to click OK. Now, if you notice, it looks very similar to the one that we were looking at, but now it's something that we created. If I go back to the strategy performance report, you can see that we have a similar kind of performance because we didn't change anything. We just built it ourselves. And I think that's a very good exercise for anyone that is trying to develop a strategy. A great exercise would be to take anything out of the box and then make it your own. And that way you can start with the very simple idea, understand what the syntax or how to build that strategy using EasyLanguage. And it just makes it a very simple exercise for you to work on. Let me go back here to my code, and I'm going to start introducing other conditions. I did say that I wanted to use a simple moving average as a way of filtering these key reversals. So I'm going to add another word here. See there we go. Let's try it one more time. There we go. I'm going to say bullish and bearish. Those are the 2 words that I'm creating now. I can add those right here on this declaration statement from the get-go if I need to. Bullish, that's going to be true, false also. And bearish, it's also going to be true, false. Now, what is the definition of bullish? Whenever the close is greater than, and I'm going to introduce the function average of the closing prices. Let me create an input that is called the AVG length. And I create an input just to have flexibility. You can hard code a number here and say, I want a 30 bar average of the close. In here, I'm just going to set it here as an input so that you can change it without having to go inside the code. I'm going to start this off at 30. So whenever the closing price are above the average, the 30 bar average, then I'm going to consider that bullish. The other side, if the close is less than, and I'm just going to copy this because it's exactly the same calculation. It's just how the comparison of the closing prices is. Okay, so now we have the 2 modes and we can start filtering the trades. I see a question here. The open positions close automatically with the next buy sell order. Yes, they do. In fact, if you only have 2 entry commands like buy or sell short, they'll flip the position between short and long or long and short every single time one of those gets generated. So you're always in the market, not the best strategy because you're always exposed. But then we're going to add an exit based on ADX just so that we can add another variation to this strategy, okay? So in here, if key reversal up and bullish, then buy next bar market. Notice that I'm using the word or the variable as a condition. When you express the condition like this, if key reversal and bullish, is because EasyLanguage is looking for a true result. So you don't have to say if key reversal up equals true and bullish equals true. You don't have to because it's implied that you're looking for a true. If you're looking for a false, then you do have to do equals false. But to keep things simple, I just don't use the equal true because it's implied by just calling the variable. If a key reversal up is happening and we're bullish, then I want to buy next bar at market. The same thing here for the short side and bears. So if we have the key reversal down and we're bears, then sell short next bar at market. Let's verify this. Okay, and the verification works well. Let me go back here to my TradeStation and let's see. So you can see that we don't have as many trades as we did before. You see a lot of the trades just disappeared because we're using a filter. If you go back here to the strategy performance report, you can see that it changed. Now our net profit actually is worse. This filter did not really do what we were expecting. Even though it did filter some trades out, it actually did not make my strategy better. So the thought process is one thing. And once you apply it into TradeStation, that's when you see the reality of things. It didn't work for this particular symbol. Maybe it could have worked for other markets, but in this particular case, we made the strategy a little bit worse than what it was before. I think our profit factor was closer to the dollar than what it is at the moment. Now it went down, but it's okay. We're still in the development phase of the strategy, and we can start introducing other things. Let me go back here to my code. And we did say that we wanted to add ADX. Let's see how we add the ADX calculation here. I'm going to add a trigger. Let's call this a flag trade. Okay. Trade okay is just like a flag. I'm going to set up a calculation here in ADX that says if the ADX value is above a certain level, I'm okay to trade. This means that it'll work as an additional filter, because what I'm thinking is, okay, maybe the bullish bears did not work as expected, but now if I look at trending markets, meaning that I look at ADX and I'm looking for a higher than usual value, then I may be onto something. So trade okay would be something like ADX. ADX is the function. ADX of the close. I'm going to use 14 bars. Okay. Because that's the default calculation for the ADX, 14 bars. I can hard code it in here. If you want this to be flexible, you can put it as an input, and then you have the ability to customize that even further, like in optimization and other things like that. But I want the ADX value to be greater than the trigger level. Now, what is the trigger level? That's something that I can set as an input here. Trigger level, I'm going to set that at 20. So I want the ADX value to be greater than 20. All right. If I go back to my TradeStation, let me show you what this looks like. I'm going to add the ADX value to my chart, and so we can see it at the bottom. This is the ADX calculation. Okay. We can see that by default, the ADX has this green line across 20. So you can see that the trigger level by default on the ADX is 20. You can also see inside parentheses that we're using a 14. So that's where I got the values from. I got the 14 from the default parameters of the ADX, and I got the trigger level from the default trigger level of the ADX. And what we're looking for is to enter a trade only when ADX is above 20. Now let's see if that does anything to my strategy. I'm going to go back here to my code again, and I'm going to say if trade okay, and all right. So I'm just adding a third condition to my entry. So all three have to be true. The trade okay, so you have to be above 20 on the ADX. You have to have a key reversal condition met, and you have to be either bullish or bearish to take a trade. Now, when I verify this, of course, strategy not verified. The reason why is because I added the trade okay flag, but I didn't declare it as an extra word. Trade okay is a true false variable that I'm going to start using as well. Okay. Too many inputs. So the ADX doesn't need, let me just make sure that the ADX does not need the price. Let's try this. There we go. So I had an extra parameter inside the ADX function that wasn't needed. I didn't need the closing price. It just needs how many bars to use to calculate the ADX. Okay, so now verification works. When I go back to my TradeStation, it should have filtered my strategy a little bit more. But if I go here to my strategy performance report, it made it, see, the net profit is not as bad as it was before, but the profit factor did go down one more penny. Maybe the problem here is that the strategy is flipping me back and forth between a long trade and a short trade, and I have no way of exiting. Like, for example, here's a losing trade. You can see that the strategy took me short, but you can see that throughout this period, the ADX was below 20, and it didn't get me out of the trade. It only took me out of the trade when it was time to go long again. So maybe this is something that I need to fix. You also always have to go back to how the orders are being generated and see what type of behavior is it that you want to actually have. Let me go back here to my code. And I'm going to do an exit. I'm going to do if, it's trade okay equals false. Then I'm going to set it begin because I'm going to do the two selling transactions in one place. I'm going to say sell next bar at market. That's my first selling transaction. And buy to cover next bar at market. And we close with an end. So this is called an if then begin block statement. So we have two actions. If trade okay equals false, meaning that if it drops below 20, then I want to get out. Let me see how that plays into my strategy. I'm going to go back here into my TradeStation, and here you go. So now you see that short trade that stayed on for a while. Now we have a white arrow that takes it out because we dropped below the trigger level. So now we have areas that we don't have a position open is because it's not okay to trade. That's one of the reasons why we create some flags, is for the strategy to have some sort of rules and constraints. Let's go ahead and take a look at the strategy performance report now. Interesting. Now take a look. It's still a break-even strategy, but we're not on the negative side anymore. The profit factor is still 1.05, which is not good. But you can see how the long trades did better than the short trades. But we are onto developing a strategy that has other conditions and is trying to adapt to the market. In this case, we're using a filter on moving averages, like the bullish bearish. We're also looking at ADX and see if the markets are trending. One thing that I've done also in many of strategies is look at what the ADX is doing. Because a lot of times, yeah, the market may be trending, but maybe we want to get out sooner than when it drops below 20. The only exit we have here is when ADX drops below 20. But what if we have consecutive lower ADX values? That's something that I look at as well. Yeah, if the ADX is going up, the markets are trending. But if the ADX values are starting to drop, it may be that the trend is losing steam, was not as pronounced as it was originally. But I'm going to use that as a way of signaling that we need to exit as well. So let's go and create that into our strategy and see how we can code it. Trade okay, so this is my drop below 20, but I'm also going to do ADX drop. The ADX drop, this is another true-false expression, by the way. So let's go ahead and add it before it generates an error here. ADX drop is something that I'm going to define right now. And what it does is it creates, it's ADX right here. ADX is less than ADX 1 bar ago. It's less than ADX. Okay, hold on. So ADX, or the current ADX, is less than the ADX 1 bar ago, and ADX 1 bar ago is less than ADX 2 bars ago, and ADX 2 bars ago is less than ADX 3 bars ago. Notice that I'm putting these numbers inside square brackets. Those are just historical references of the ADX values. So I'm just looking back 1 bar, 2 bars, 3 bars. Now I can make this line as long as I need it to be, but if I get 3 consecutive lower ADX values, then I also want to get out. So for the exit condition, if trade okay equals false, or notice that I'm in this particular condition, I'm adding in or because I wanted if you have a drop below 20, get me out. Or if you have an ADX drop, then also take me out. So the ADX drop, I can just reference this like that. If trade okay equals false or the ADX drop happens, get out as well. Let's verify, and verification is successful. Okay, so let's go ahead and take a look at my TradeStation. Interesting. You can see that we have the selling transactions happening much more frequently. Before, I used to have a little bit longer live trades. Not anymore. Maybe we overdid it with a condition. Maybe we have to be a little bit more restrictive. But let's go ahead and see what happened to our performance report. Take a look. We're on the net profit factors 1.55. See, the short trades didn't work as well. You can see the total number of trades in the historical backtest. If I go to my performance graphs, this is how my performance graph looks at the moment, which is not bad. I see a little bit of drawdown in some areas. For example, over here, we reached a peak of $2,300. It gave almost 50% of that back into the market, but it gradually goes higher and higher as we go along. Now, is this a strategy that I could trade? Maybe. I would still want to continue developing and trying to test different things, but you can see that in about 45 minutes, we were able to integrate three different concepts into, or three different technical ideas into one. The key reversal as way of entering and exiting, filtered by a simple moving average, whether the security is bullish or bearish, and at the same time, bringing in some ADX calculations to see if there's a trend developing or if the trend is losing steam and deciding whether to keep a position open or not. That's my class for today. Of course, we can continue doing other interesting things here, but I wanted to show you how you can customize your strategies and start developing things on your own by not reinventing the wheel. We're just talking about using calculations that are built into TradeStation, ADX, simple moving average, and key reversal, and bringing them together into one cohesive idea. If anybody needs access to this strategy, let me know via email, and I'll be glad to provide it to you. But let me go ahead and just make it available here. This is going to be available as a recording as well. So you'll have that opportunity to review the content if you want to take a look at the code and maybe pause it and create it with me as I go along, okay? Yes, perfect. You can screenshot also the presentation, just a screen capture, so that you can create or save a picture of this as well, okay? But guys, I see a question here. Will ADX rise, opposite of drop, help the sell profit? Maybe. That's an interesting idea, Pradeep. So the same way that I looked at the ADX drop, I could have added another one that says ADX rise and test it as well and see if it has any impact on my buying or selling, for sure. Definitely. All right, guys, thank you so much for joining me today. Have a wonderful afternoon, and I look forward to seeing you in one of my future classes. And make sure that you check the events calendar for topics. Have a wonderful day. Talk to you later. Bye-bye.